Howard released this memo in December called the Sea Change.
Love the name.
Great name. And for clarification, why it's called the Sea Change is he believes an event has gone on that isn't like a month-to-month change or a year-to-year change. His view is that there's been a complete shift in mentality of investors, and this warrants more substantial thinking. And he made this chart, and I'm actually going to take the time to read out the chart because I think it's really good. Or it's more of a table than a chart.
Table.
But he basically examines 2009 to 2021, which how many years is that? Like 12 years?
12. Yep.
Yeah, so it's 12 years, and then he talks about today, right? So this is let's just call it post-21. So he highlights Fed behavior, which would be equivalent of RBA behavior, and we probably think about both. He goes from 2009 to 2021, highly stimulative, low rates, printing money.
Yep.
Today, tightening. So it's a different Fed. The next one, inflation, 2009 to 2021, dormant. Today, 40-year high. So he's highlighted two really big differences. Next one, economic outlook. And this is where he's kind of like surveyed or looked at general view. He's going, well, it was positive from 2009 to 2021, bulls, very positive outlook. Today, the majority think a recession is likely and coming. Likelihood of a distress, 2009 to 2021, minimal because people can always just borrow money cheaply.
Yep.
Today, significantly rising as many companies are trying to access things, or access credit really, but that's a future point. Mood, like what's the mood of the investing community? I'd love to know how he quantified this, but in general, he believed from 2009 to 2021, it was optimistic, where his view today is that it's guarded. And I will say the access Howard would have to people to quantify this would be immense.
Yeah,
I don't think he's guessing. I really don't. I think he's talking to people that would be able to help quantify this before he's published it.
He even mentions in his memo that he talks to their own investors to validate his points on his memos before he even comes out with them. So he's got a huge base on this.
There you go. Next on the list, buyers. So this is investors eager. And I would concur, you only have to look at the housing market to like how eager people were to today is hesitant.
Yep.
So very much a shift in buyers. Holders, complacent. I love this one. I think like people who are holding assets, how are they behaving? Like things can't go wrong. Where today people are uncertain and questioning, should they sell things?
Yep.
Key worry in 2009 to 2021, and I'm laughing as I see this. The key worry of investors in 2009 to 2021, FOMO.
Fear of missing out.
Absolutely. Did you feel that at all, Grant?
Never. No, not at all.
I nearly bought a house with illegal renovations because I was worried someone else would buy it.
Yes.
We've got to secure this now. Let's do it. And then like today, investment losses. People are concerned they're going to buy things that go down in value. That is such a huge difference. Risk aversion, absent. You only have to look to crypto.
Oh my gosh. It was like,
that FTX saga, you look at how many big name investors ended up investing in FTX and didn't do the due diligence.
But you can even go back to like ICOs, like initial coin offerings in crypto, NFTs. Like you had so much where people just, their risk was completely absent. I think absent's the best word.
Completely. What about today? Rising. People are risk adverse.
Yep.
Credit window, which I believe is the idea of like rolling over bonds and doing things so that you can access finance or refinance thing. So it used to be wide open. The window to get credit was wide open, where today it's becoming more constricted.
Yep.
And do you know what's fascinating? In business, I've particularly noticed this with like the open pays and afterpays and things like that really changing their lending policy of like how much they're even lending out now. Very fascinating one. Financing, plentiful. And I would concur it was very easy to get money. I can't believe how many times I was able to go to a bank in the last few years, so before 21 rates started going up, and they would just say, yeah, have another $1 million. It's like ridiculous.
Try to force it down your throat. Just take more money.
Borrow as much as you want, where today it's scarce. It is much harder to access financing. And your experience in the SaaS world would highlight this as well. I know you've mentioned many times how many tech companies you know that just can't get money like they could anymore.
Even to that point, like I'm going through a refinancing now. Dude, refinancing used to take me a couple of weeks. Now it takes me months.
Next one here, yield spreads. Well, previously they were modest, where now they're normal. Now I won't pretend I understand yield spreads hugely here, but my interpretation is the difference between like borrowing money for 1 year versus 10 years.
Yep.
Where it used to be all very, very low. You could get a 1 year bond and a 10-year bond near the same rate, where now that spread is very different. And then prospective returns, lowest ever versus more than ample. And that last one, again, I'm just going to drop off the list. But what a list.
Can you just do interest rates as well?
My bad. I skipped probably the most important one in here. Interest rates, lowest ever from 2009 to 2021, where today, and I love the framing on this, more normal. He views today's rates as normal.
Isn't that interesting?
So as you went through this memo, Grant, and just the differences, and I love the way he's framed this whole thing up, what struck for you?
The fear is real. It's like totally, I'm like, get out of my head, Howard. Like this is everything that I think about, and a lot of people that I talk to in investing, like these words are exactly the buzzwords that they've spoken about. Like, how are you going with looking to get more properties? Financing is just very difficult for us to get. And I'm like, oh, like it's like scarce, right? And so it's really just a mimic of what I see and what I felt immediately on the current times. And I think that was one of the biggest points that I took away from this when I was reading this list. And I'm just like, Howard, you know me way too well.
Totally right. Howard, you put into words what I am feeling and what I am seeing other people feel right now.
Yeah, and to the point that I actually saved this as a bit of a checklist to do like a personal audit of myself. So it's for me, like when I am looking to go buy it, like a new investment or something like that, I'm actually going to work through and I'm like, how do I feel about these things? Because I think it's such a good list. Because I'm like, this is actually great because it's such a good audit. Because you look at the top like 8, which is like the Fed behavior or RBA behavior, inflation, mood, buyers, holders, etc. And I'm like, that's all very negative. But he goes on to the end to say like, well, interest rates are normal and like there's actually some opportunities out there. And I'm like, isn't that fascinating that he's sitting there going, well, all of these things are happening, but this is actually a new environment, but the game has just changed.
Yeah, he did an excellent job of highlighting how many different areas there are change. Like it's not just that interest rates have gone up, like it's that interest rates have gone up, there's inflation, there's economic outlook, there's Fed behavior, there's mood, it's what people are doing with holding assets. Like it's all these things coming together to drive that uncertainty in the market.
Was there anything on this list that you thought you would include that would have been, it's the same?
No.
I was looking at this list going, aren't anything very close? And I'm like, no, they're almost polar opposites in most scenarios. And I'm like, has this list been sort of structured this way? I'm like, no, it has. I'm like, everything is just different now. Like it's not like there's similarities between it. And that was why I thought the theme of the whole memo, which was called, to your point, sea change, was so perfect because it's not, you are packing up the kids and family and moving to a completely different location, different schools, different work, different everything. And that is what it is.
I think of this like the internet. And let me tell you why. When the internet was introduced, it was a moment in time where like the world changed. And maybe not for the first few years, but when it really started ramping up, we shifted from things like the yellow pages became Google. Like it's not going back. It's like it was a sea change. I view what is in this in kind of the same light here. This is where we look at this and noting these things can change again. But my view and opinion on this is we're now entering a new era. And that's why we're seeing things like the major regionals. Boom. Like that's a part of where this is now striking it. I think we're also seeing that because of this change, it's caused very interesting behavior in some investors, and that might actually be your opportunity. So for people that aren't willing to accept the internet, using this analogy. Like how many people were like, oh, the internet's not going to make a difference.
Yeah.
I'm not going to get on board early.
Yep.
Who later then kicked themselves because they were like, oh, had the opportunity to buy that domain, be the first company to do the online thing. Like there was many. Where I look at this now and go, if you were to take this list seriously and ask yourself the question, if these changes and sea change was to occur, what happens to the property industry?
Yep.
Where would I want to position myself to be most successful with it? And I think that is a fantastic question for people to be asking. I really do.
All right, fellow property investor. If you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.